Today on the hiring line, we're talking to Claudia Wert. And Claudia, thank you very much for coming on. I wonder if you'd be so kind as to introduce yourself.
Well, thank you so much for having me on the program. I greatly appreciate it. So just a little bit about myself. My name is Claudia Wert. I'm a financial advisor with the Wert Investment Consulting Group of Wells Fargo Advisors. And we are located in Wyomissing, Pennsylvania, but we serve clients across the country and technically speaking now internationally. So born and raised in Reading, Pennsylvania, I went to St. Joseph's University for undergraduate. I graduated with a degree in finance with 2 minors in economics and history. And originally, I did not want to go into the financial industry. I was interested in first museum studies and then manufacturing. And I started interning with my father's firm, Wert Investments, back in 2013, right after 8th grade. And what I really found that was wonderful about the wealth management industry is that it really encompasses a broad diversity of fields. So you're able to work with people, in manufacturing, in museum studies, in the fashion industry. So it's a broad overview, and that really appealed to me. So a bit about our firm. So Wert Investment Consulting Group started by my father in 1985, right after he graduated from the University of Chicago with his MBA. He's also born and raised Reading, Pennsylvania. He started out with Wheat First Butcher Singer. And this is a really fascinating story because our firm has evolved so much over the years. He started out by making a market in local bank stocks. And this was way back in the 80s when the spread between the bid and the ask on these bank stocks was significant. But over the years, we've developed into a total holistic wealth management firm. We're all things to a few people. We run just over 300 million, and we like to work with people who do things. Right now, the retail side of our practice focuses on building portfolios of asset managers to fit multi-generational wealth strategies. And we like to partner with local consultants to create a roadmap for success, be that your estate planner or your accountant. Flip side is what I do is institutional wealth planning, which is a completely different field, actually. There's 2 sides of financial advising. There's retail and institutional. Retail works with families, individuals, and institutional works with companies and nonprofit organizations. So if you think about it, retail is like the individual, and institutional is like the company. So I started I got into the institutional field in 2013 because, believe it or not, there's a huge dearth of advisors who specialize in institutional planning. And I just found the field itself fascinating. It's a perfect blend of law, of analysis, of individual planning, and I just fell in love with it.
Well, that's a wonderful introduction. Thank you so much, Claudia. Now, of course, there's a little rain on that particular parade, and we've all been suffering with COVID-19 now for some months. And I wonder how that's impacted the financial services industry or perhaps your own company.
Yeah, that's a great question, actually, because there has been, over the past few years, it's accelerated with COVID, is the digitization of the wealth management industry and the financial industry as a whole. So let me read you some statistics because I find these fascinating. So over the past few years, and especially increasing during the COVID period, there's been a 7 to 10 increase in client engagement across all digital platforms. So prior to the pandemic, you went in, you saw your advisor came to see you, was in person. You maybe took out 2 to 3 hours for a meeting. Now that's all happening on Zoom. And you sit down, you schedule a meeting, and it's over and done with. It's pretty straightforward. And it's interesting because the majority of advisors are in their 50s and 60s. I mean, the vast majority. And the process of adapting to holding client meetings in the digital space has been quite challenging for a lot of advisors. And also in the reverse field for clients as well. The other interesting thing is that there's a 4 to 5 times increase in digital research consumption. So people are seeking out advisors and advisory research online instead of going and meeting with people in person. So there's a huge opportunity right now at the wealth management space to really build your online presence. And it's not something that financial advisory firms had really thought about before. The web presence of a lot of advisors is very limited. And you've seen over the pandemic period a huge increase in advisors who are looking to build their own website or looking to produce independent content. And they've learned to become their own marketers and their own content creators. And in a way, it very much mirrors like maybe a YouTube content creator, because they're trying to develop new material for what would have been an in-person conversation.
I was just going to say, I think that's impacted also probably by millennial trends in investing, which I think have driven a lot towards exchange traded funds and that sort of thing, in some ways simplifying and in some ways complicating the whole equation. Do you see those two trends colliding or coalescing?
Yeah, I do. There's been a huge impact on millennials on the wealth management space. Up to, I want to say 50% of all people in the workforce by 2025 are going to be millennials, which is a significant percentage. And most of them are what we would call internet natives. So they've grown up with the internet, they're very comfortable with it. So you have a whole migration towards completely online processes. So what do we have now? We have online banking. We have all your account statements can be viewed online. You can make trades online. And that didn't used to be, that wasn't a very prevalent concept before millennials came on the scene. And it's increasing rapidly because nobody can go anywhere. So you can't go to your bank, you can't see your advisor, you have to deposit checks online. You have to start placing orders and trades online. And the financial industry has had to adapt to a lot of these demands.
Now, when we think about how COVID has impacted the business in the short term, this is not like a retailer where there was a sudden rush and people bought all of the toilet paper or stocked up on specific things. That was, of course, a problem for the retailer, but it was short in duration and they were able to address it. Do you see big changes over time? I mean, where do we go from here, Claudia, as far as financial services? Does it continue? Does it stop? Does it evolve? What happens next?
Yeah, okay, this is interesting. We just hosted an event. Every year we host, usually it's in person, event called the $1 Million Producer Roundtable. And it's for advisors who produce over $1 million in gross assets. And so there's some of the top advisors in the industry within our firm, within our company. And some of the trends that they've been seeing are quite fascinating, namely in the fact that most of them do not feel the need to go back to the office after the pandemic. So we think that going forward, the majority of client interactions are going to be over the internet. So you're going to see a large reduction, theoretically speaking, in branch office space. So a lot of these big offices are going to be closing, at least what we predict. And it works out better for both the advisor and the client because it makes scheduling more flexible. It makes meeting easier. You can have clients from all over the country and you develop relationships when distance doesn't become an issue.
I can see that then as being a long-term effect. Of course, the flip side of that is the people who rent those spaces out, the commercial real estate market may need to go through some fairly substantial and painful adjustment. Do you see that as well, or how do you see that?
Yeah, I think one of the major things is that a lot of commercial real estate spaces, especially in major cities, is going to deplete. You don't want to see, people don't want to be making these large commutes anymore when they can work from the comfort of their dining room, as I'm doing right now. So over the next 5 years, what I predict is that you're going to see a major downsize in the amount of office space overall, but especially within major cities. All those other businesses that have arisen to support the corporate office culture in these big cities. So all of the restaurants, all of the bars, all of the stores that people used to frequent during the day are perhaps not going to do as well as they did in the past.
Mhm. Yeah, very important implications. Now, you've said a little bit about how your industry is changing and your business. As you know, some industries are really in regression at the moment, the hospitality and entertainment and some others. We find people coming to our firm saying, I need to change industries. And so the first thing we do is we inventory their transferable skills to help them decide on where to go, given their background and their skills. And I'm wondering how you see that working out as far as the financial services industry is concerned. Are there specific skills that you feel are more transferable, more desirable, more undersupplied at the moment in your industry? And if so, what would they be and where might they come from?
I think the number one skill that's transferable across all industries is those soft interpersonal people skills. So the ability to connect and form relationships and build those relationships over a period of time is something that's always transferable, always in demand. Specifically about the financial services industry, I think technological skill and innovation is something that's going to be definitely necessary. So, do you have the ability to create a digital presence? Do you have the ability to write content? Do you have the ability to produce independent material? And always writing and creation of new material is something that's transferable across all industries. There's a really interesting book on this subject, actually. I was reading it the other day. It's called The Medici Effect by Franz Johansson. So it's a book on how innovation is created. And the theory of the book is if you take a multiplicity of fields, so two or three fields that might not be related, like banking, art, and let's say banking and art, and you mix them together, there's always going to be tidbits of information that form and blend together to create new ideas. And the ability to look across fields to draw out new solutions and breaking out of your silo is something that is going to be huge in the next few years.
Well, I find that really very encouraging because many industries tell me basically they need analytical skills, they need engineering skills. What you're saying is that the soft skills are also in demand, not only the people skills, but the ability to develop compelling content, for example, as a solo producer, for example, is something that probably isn't that prevalent today in the financial services industry.
I think it is to some degree. One of the things I think is really interesting is that there's been a large influx of people into the financial services industry who haven't necessarily had prior financial training. So you have people going into banking who perhaps majored in psychology or art history or communications. And they're bringing those diverse set of skill sets to an industry that's been primarily, I don't want to say stagnant, but primarily one-track minded.
Right. Economists, the dismal science, right?
Yes.
Well,
economists are more entertaining than people give them credit for.
I know they are. I'm just quoting The Economist itself. Now, tell me a little bit about yourself. You actually have a very interesting track record and history, and started out on a totally different course. Maybe you could share a little anecdotes or two about your own career history that might help people who are currently contemplating a change themselves.
One of the most interesting things that I would recommend, and something I've experienced myself, is that if you're considering staying in an industry or a field long term, you should experience 2 or 3 other types of industries before settling. And the way I did it was I had 2 very different internships before jumping into financial services. The first one was with a company called Alcon, and I was in their accounting department for a summer. And it was really fascinating to get a behind the scenes glimpse of a major manufacturing operation and the day-to-day processes that went into it. And the next internship I had was completely different. I interned in the development department of the Philadelphia Museum of Art. So I got to spend a full summer doing nothing but computer programming, fundraising, and immersing myself in art history. And it was the complete opposite of the prior internship, but it gave me a broad perspective of the possibilities of what's out there before jumping into financial services. And it's always important that you maintain that broad diversity of perspective. The other great anecdote I have is the importance of always saying hello to people, going back to those interpersonal skills. So I was at the Greater Reading Chamber of Commerce. They used to have, before COVID, everything was before COVID, but they used to have these Wednesday morning coffee sessions where a local business would come in and present what they did. And I was sitting at a table in one of these sessions, and I look over and there's a guy I didn't know sitting next to me. So I said, hello, I'm Claudia Wert. I work with Wells Fargo Advisors. And he goes, oh, hello, my name is Louis Guzman. I work for Wells Fargo. How come we've never met? And it's funny because we met through Louis.
Right.
So we ended up striking up this professional relationship, and we've been helping each other's careers develop over the past 2 to 3 years. And it's really come in handy because now I use him as a reference point for all things banking and on the Wells Fargo side of things, because they're actually 2 different companies. And he uses me as a resource for wealth management and planning. So there's a real importance of just getting out there, saying hi, meeting people, because you never know what the next conversation will hold.
That is so true. We talk a lot about serendipity, and leveraging your social capital. So every contact you have can potentially be useful. You just don't know. So, well, thank you so much. It was a real pleasure, Claudia, talking to you today. Is there any parting comment or suggestion you might have for executives who are in transition or who are considering a move?
I would say one of the most important things you can do is read constantly. I didn't have a broad perspective on just how interconnected the world was. There's a fantastic book my mother put in front of me called I, Pencil by Leonard Reed. And it's the story of how a pencil is made. And it starts out with a logging company in the Amazon rainforest, and it moves over into how the tin is created to where the oil is mined to create the erasers. And what it showed me was how interconnected and how many different industries come together to create our market economy. And by branching out, by reading a multiplicity of sources, so history, politics, economics, theology, healthcare, the list goes on, you form a broad perspective on the world, and it always keeps you open to new ideas. So that would be my advice to moving executives.
That's a wonderful advice. I know I very much enjoyed Guns, Germs, and Steel. I don't know if you know that book.
Oh, I love that book. Yeah. We read it in college.
Yeah. Anyway, well, thank you so much today. And you stay healthy in the meantime, Claudia, and good luck with your business. And thank you very much.
Oh, thank you so much for having me on. It was a real pleasure.